When I started investing over 13 years ago, I wish someone shared these 3 lessons about investing that I'm going to share with you right now. And the first lesson is you don't have to buy single stocks. Like, you don't have to buy X stock company and stock of this company or that company. The really and truly better way of investing that I have found has been to buy and hold index funds. ETFs that are going to invest broadly into so many different stocks that you're going to be able to have a good diversification. You're going to be able to have good balance of different companies that you're going to be able to own through the index fund, through the ETF. You're going to get exposure to the top companies, to the smaller companies, to the mid-cap companies, and you're not going to have to expose yourself to one company or 2 companies or 3 companies and depend on the success of those few companies. Instead, you're going to have exposure to so many different companies. So that way, if one company doesn't do well, the rest of the other companies that could do well will help counter the problems and the challenges that maybe the other company may have. And so that gives you a well-balanced way of investing. And then your money is going to be invested for the long term. So usually and typically, especially companies in the US that I prefer to be invested in with the majority of my portfolio, I'm going to reap the benefits of those companies that are going to do very well in the long term. Especially, we've seen that in the history of the US economy. The US stocks continue to do well over the long term. Now, the second lesson that I wish I learned early on was to start as early as possible. The best time to invest was 20 years ago, whatever they say, and then the next best time to start investing is today. So if you have the opportunity, if you have the ability, go ahead and open that IRA. Go ahead and tap into the 401k that's offered through your employer, or just open a taxable account that anyone can have access to and start investing. Check out index funds and ETFs like the US Total Market Index Fund, the US Total Market ETF, the International Market Index Fund. If you're a little bit older, you can look at a Total Bond Index Fund or ETF. I don't own bonds personally, but I do plan to have some as I get closer and closer to my retirement age, my retirement years, to smooth out the ups and downs of the rest of my portfolio that's going to have exposure to index funds and ETFs that invest in equities, the U.S. market, the U.S. stock market, the international stock market, even REITs, real estate investment trust index funds and ETFs. Those are going to also be part of my portfolio, and those have a little bit of volatility, more volatility over the past than bond index funds. So having a little bit of bonds, fixed income, putting your money in CDs, putting your money in high yield savings accounts, a little bit of that will help counter the ups and downs of the stock market. However, being exposed to the stock market is still going to be how you build wealth, how I understand that I'm going to be able to build wealth over the long term. Now, the third lesson that I really wish I had learned was to not just limit my investing to my 401k. You can have access to an IRA, like a traditional IRA or a Roth IRA, having a taxable account too, because you can put money in a taxable account and watch the money grow. Yes, you'll have tax liabilities, you'll have tax consequences that you'll be responsible for, but at the same time, that's a huge way that so many people make money and build wealth. Truly, that is one way that I have learned so many of my peers are building wealth, because they open that taxable account and they're able to fund those taxable accounts with the money that they have, that they don't have to wait until the age 59 and a half or 65 to tap into. And the last account that I would say doesn't get a lot of love are HSAs, health savings accounts. And that account is probably one of the more underutilized accounts out there, because you're able to use a health savings account to buy and hold long index funds for the long term. So that way, in the long term, you're able to build wealth through that, watch the money grow in your HSA and use it for medical expenses. And if you're interested in learning more about HSAs, check out the video on the screen right now where I get into a deep dive of health savings accounts. It's a really important video that I want you to watch and be familiar with. I'll see you over there. Peace.